we're doing today is actually computing how much tax you would owe on your income. Now, please be aware the chart we're using is from our textbook and it is not up to date. So do not use this chart to calculate your actual taxes. Okay, this is from like 2008 or something, but it's the one that goes with all of our answer keys that are already made. So if you were computing these, you would just use your new chart and a form to complete your taxes. So this chart is your new bestie for section 8.1. The steps that we're about to write down in our notes are actually typed out on this sheet. Okay, so step 1, you're going to determine your adjusted gross income. To find your adjusted gross income, you take gross income minus adjustments. So like all the formulas that we're about to write down on our notes are actually on this sheet, so you don't have to memorize them at all. Okay, but we do have to know what we're doing when it comes to the problem. So the first thing we'll do is we will take our gross income and we will subtract our adjustments. Adjustments will be given to you in the problem if there are any. Okay, to determine your taxable income, you will take your adjusted gross, which is the answer you got from part 1. So always use your answer from part 1 to get part 2. So you'll take your adjusted gross and you'll subtract the sum of your exemptions and deductions. Now, exemptions are things that you don't have to pay tax on, and deductions are things you don't have to pay tax on. So you add those together and then you subtract them out so that you do not pay tax on those things. Now, the formula sheet that you get has two sides. One side is the steps, the other side is the chart. So if you turn to the other side, you'll see that it says STD deduction, standing for standard deduction. Okay, standard deduction, as you can see, for a single person is $5,000. So any problem we're doing with a single person, it's $5,000. If it's married filing jointly, that's $10,000. So when you get married, you actually get a benefit. You don't have to pay as much tax. You get to deduct more. Okay, same with head of household. You can say they get a little bit more. So be careful if it says head of household, like it's all in front of you. You just have to look at the information. You don't have to memorize anything. Now, right below there it says exemptions. Okay, so exemptions, you can see, are the same all the way across the board. But it says /person. What do you think that means? Per person. Okay, so sometimes when you have head of household and you have like 2 kids, you're going to multiply that by 3 because you have 3 people. You want the person, their 2 kids, 3 people. Okay, so it's per person. All right, so that's where these numbers are coming from, is from our chart. Then the last thing you'll do is determine how much income tax you owe by computing your tax computation, which we'll talk about, and that uses this chart and these percentages. And you always do subtract your tax credit at the end if you have one. The hardest part of this is step 3. And it's not that hard, but if you don't pay attention, you will be lost. It's just multiplication and addition, but you want to pay attention. All right, I am going to eliminate something from our first question, and this is just the chart that you have on your that you picked up on the way in. It does tell you that the medical expenses have to exceed 7.5% in order for them to be deductible. So like, just because you went to the doctor 3 times and your bill was like $100, you don't get to deduct that. It has to be over 7.5% of your income. So if you have like large medical bills, they let you deduct those. So I always just kind of draw attention to that. But I'm going to get rid of this just because I hate to put this one on the first. So just get rid of that. Okay, so we're going to do all 3 steps. And again, you can have your chart right next to you to figure out what you're doing. First thing we're going to do is we're going to find our adjusted gross income by taking our gross income minus our adjustments. So this is a single woman with no dependents. Her gross income is $52,000. And her adjustments are $4,000. This is all coming from our given. This is paid to a tax-deferred IRA, so that's retirement fund. So 48,000 is our adjusted gross. Yeah. And again, you don't have to remember what to do, you just have to be able to read. Okay. Taxable income, step 2. We're going to take the adjusted gross. So you always use the answer. This is one thing students will mess up. They'll start back and use the 52. You always want to use the adjusted gross, which is 48,000. And we're going to subtract our exemptions plus our deductions. Now, to find out the exemptions and the deductions, you have to do a little bit of work sometimes. So sometimes I'll create a little chart over here.
Is that a plus sign or is it?
That is a plus sign.
There you go.
Yep. Plus. All right, so the exemptions, where do we find those? Bottom of the chart. Okay. One person, one exemption, 3,200. Now, the only reason I say to do this is if there were 2 or 3 people, you'd have to multiply by that to figure out your total number. So sometimes you have to do work. Now, the deductions. And I guess I should have harped on this a little bit back here. For the deductions, you are going to choose the greater of the standard deduction or the itemized list. So what you're going to have to do is you're going to be given some deductions. You need to add these up and see if you want to use these or the standard deduction. You take the bigger of the two because you want to deduct as much money so that you don't have to pay tax on it. So let's go ahead and add up all of these numbers. And we get $12,100 as stated by V. Bruce. Now, in your notes, jot down compare to the standard deduction. So the standard deduction is $5,000. So you're doing this versus 5,000. And you're taking the bigger of the two. So the itemized deduction is definitely better because we're going to get to subtract more money. So we're going to use the 12,100. Now be careful, if you are married filing jointly, your standard deduction is 10,000. So you might have less deductions, but you would choose this number over the itemized list. If it's whichever one's bigger, you pick. Okay, now plug those in. So exemptions is 3,200 and deductions is 12,100. And then it's up to you whether you just want to punch that all in your calculator or if you actually want to add them and then subtract them using order of operations. And we will get 32,700. Again, not too bad, but you do have to do a little bit of searching on your sheet to figure out what are your exemptions and what are your deductions, because those aren't always just straight give to you. All right, income tax, the last part. The tax computation is where a lot of you will screw up. Oh, shoot. I'm going to do that. I need this chart. Let me get rid of that over here. Because you're going to have your chart next to you. I need to have it on the board so you guys see what I'm doing with the tax computation. All right, so for the tax computation, we are going to use our taxable income. And this is called a graduated tax bracket, okay? So you're going to pay 10% on $7,300. You're going to pay 15% on the amount of money that falls between these two values. You're going to pay 25% between this and this. So you're not, let's suppose your income were $50,000. That doesn't mean you're paying 25% on all of your money. You're only paying 25% on like a small chunk of the $50,000, if that makes sense. So it's called a graduated tax bracket. So what you need to do is start, okay, first of all, choose the correct column. This is a single person. So we need to take 10%, which would be 0.1, times 7,300.
why wouldn't you jump right into the 25%?
because we have to do each of them. So we're going to work our way up until we get to our max value. Okay. Now, next and the number we're working towards is this. Okay, 32,700 is what we're paying tax total. All right, so now we go to the 15%. So this will be plus. You're going to add this 15%, which will be 0.15. Now, you need to actually take it on this whole amount of money. So to figure out what that is, you can subtract them. 29,700 minus 7,301. And that'll tell you how much money is in between those two values. Now we need to keep going because we need to get to 32,700, which is not in this tax bracket. So we'll add our 25%. Now, the 25% goes all the way up to $71,000, but we are not being taxed on $71,000. We're only being taxed on $32,700. So this number goes in as your large value, $32,700, and you're going to subtract the lower bound that is in the 25%, which is your $29,701. Okay, that is your tax computation. And then at the very end, we have to subtract our tax credit, which you can do now or later. We're going to subtract $50 or $500. Now, this whole thing can go in your calculator. You can just type it in using parentheses. If you want to do piece by piece, you can. Like if you want to do this, 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 and this, and then add them together, which I did do on my sheet. But I personally, if I were doing it, I would probably just punch it all in my calculator. But in the event that you type something in wrong, this will give you some partial credit. Because obviously, you'll want partial credit in the event that you get the final answer wrong after all this work. The biggest mistake I see here is some of you will forget to subtract the tax credit after doing all the work. So some of you will get $4,839.60 and forget to subtract that $500 at the end. So I always just take off like a half point. But the final amount of tax you owe on your income is $4,339.60. So you make 52 grand. This is the only amount of tax that you're actually paying after all of your exemptions and your deductions. So you compare that with how much the government took out of your paycheck every month, and then at the end you might either owe money or you might get a refund. You guys are probably familiar with.
How would you have?
Okay, let's do another one. Do one more.
Taking the taxes out, why do you have?
In case they don't take out enough. So whenever you do your W-2, you might select too many dependents and then you get no. That tells them how much to take out. Some people will claim too many.
I'm just making myself
All right, so example 2. Single man, no dependents. So same column we were looking at. First step is to take your gross income, $40,000, minus your adjustments, which is $1,000. We can at least handle this part, I hope. $39,000. Now take the $39,000, make sure you don't go back to your original. $39,000 is your adjusted gross, minus our exemptions and our deductions. So again, for exemptions, we go to our chart. Exemptions are $3,200 per person, and there's only one person in this scenario, single man. So $3,200. Now, deductions, we're either going to pick the $5,000 or we're going to pick the itemized deductions over here. So go ahead and add those up, and we'll get $4,800. So $4,800 versus $5,000.
Oh, wait, yes,
$5,000 is better. Okay, you want the deduction to be bigger because you're going to subtract it. So you want the bigger of the two numbers. You add up all your itemized, you pick the bigger of the two. So this time I'm actually picking the standard deduction that comes from my chart. And then we'll add those numbers and subtract them, and we will get $30,800. Now the tax computation. So again, you want to be on the back of your tax chart this time. Make this a little bit bigger. And I'm actually going to cover up that column because I don't need it. The only one I'm using is my single column. You start at your 10% and you work your way all the way up until you get to the number that you found in part 2. Okay? So 30,800 again is going to fall somewhere in here. So my calculation is going to be really similar except the last number is going to change. So we're going to have 10% of 7,300. 10% of 7,300 plus 15%. 15% of this total amount. Some students like to just subtract these and write the numbers there so that like they always have it, but and we need to go into the 25% bracket, but again, you do not want to take 71,950 minus 29 because you don't make that much money. You only make 30,800. So this is going to be the upper bound in your calculation. So we'll have 30,800 minus the lower bound, which is 29,701. And we have no tax credit given to us, so we're not subtracting anything at the end. So we just run those calculations in our calculator. Again, you can either do it piece by piece. So multiply these, get 730. Subtract and multiply these. Subtract and multiply these. So if you look at it, the numbers I have come up with, even though the 25% is a larger percentage, you're only paying $274 of that percent. So it kind of helps to wean out that like people that don't make a lot of money aren't paying a ton of tax. It's a graduated tax system which is designed to hopefully alleviate that. We add all the numbers together, but you can see the more money you make, the higher tax you owe. But again, they're not going to charge you 35% on all your money. They're only going to charge you 35% that you make over $326,000. So that's how that works. All right, for your homework, let me pull it up on the board because you don't have this. Make sure you write this down. 452 to 453, numbers 40 through 50 even. Everyone write this down because it's not on your sheet. And 51 and 53. These are the tax questions. These are just easy little short questions. So like 7% of what numbers. Now, suppose you forget to write down the homework. I did put up on Google Classroom my lesson plan for the week, which has the book numbers, the page numbers, but since for some reason our copier didn't print out what you need.